Boom. We are live, ladies and gentlemen. Thank you for joining us today. A Bitcoin warning. If you don't own any, it's way too risky. Yes, at this point, it is far riskier to not own Bitcoin than it is to own it. And that's what we're going to be here discussing today. I've got some fun charts pulled up for you. We're going to take a look at some of our favorite alternative digital assets. We're going to pontificate around the space. And we're going to be diving in and taking a look at a few of your guys' thoughts and questions at the end of this episode. So if you want to chat with me, be sure to stick around at the end when we go over and do a little bit of freestyle. First, though, what I want to do is jump over here, this colorful little rainbow chart. I'm going to say something ridiculous like, hey, it's for Pride Month. No, I'm just making shit up. But this is a logarithmic regression chart. This is Bitcoin on the weekly. Although we don't have all the data back here, this is only to 2010-11, which does screw up some of this early start of the regression. You would probably want all the data, but hey, this is what we're going to work with right now. This is okay. So first off, what I want to do is speculate on this first idea here. Number one is that if you look back in Bitcoin's past, there are no times when the bear market has returned to the previous all-time high. So the closest would have been back here in 2013 and 2015, when the bottom of the market in 2015 almost came down to touch the 2013 high. Although it did never happen, it got pretty close. Actually, you know, if I put some candle wicks on, that may not be entirely true. So let's make sure. Okay, so with the wicks on, just for some clarity and increased resolution here, there we did have a wick that did hit the low. Now, what's been interesting and what I think is that as Bitcoin grows, it actually becomes more and more stable. I feel very confident that Bitcoin is actually going to basically become the only stable coin you're going to want to hold. Now, right now, it's currently very volatile against a lot of other things. But I suspect that as time goes, it's actually going to become much, much more stable. And then its long-term growth will effectively end in a stable price of some sort, where the fluctuation isn't as dramatic as it has been basically the last decade. So one of the things I wanted to do here was point out the, well, at least from the log chart specifically, our previous regression line here is around 23,000. Now, again, I don't think we go that low, but just for fun, let's remember that it's important to understand that you should not be adverse to downside risk, which means I try to constantly eschew this idea that consistency and strategy over time basically have the best results. I don't think anyone should ever leverage trade, or at least 90% of you shouldn't. Maybe if you want to play around, you want to learn, you want to mess around and do some silly stuff, throw 50x leverage on a Dogecoin or something with $100 in a closed margin account, so you're only risking $100. Go ahead, play around. It's fun to learn and experience. I always suggest people should do that. But in terms of actually large portfolio growth, it's much, much easier to be patient. Now, here's why I recommend this. So this is Matic's chart. Now, it doesn't go back any further than 2021 because this is actually the FTX trading view chart, but let's actually add Matic from one of its older charts. Let's go Binance USDT. That should do it. Should give us a bit more of the data that we're looking for. This is not the data set you were looking for. There we go. Okay. So at least back here to 2020. Yeah, there we go. Okay. So for those of you that have been following along the Bear family for quite some time, we were big fans of Matic, which is now Polygon for those of you that are new to this ecosystem. There was no need to ever be in a leverage position with Matic. Had you been able to accumulate, let's say at approximately the 2% or the 2 penny price, you're still up 28 times today. And at its high, it was up almost 150x. Now, what's important to remember here is that throughout all of, actually, I wish there's more data on this chart, but it goes back even further, and most of the chart's data is actually around this price range, so it doesn't change too much. But effectively, you had like 3 years to accumulate Matic at like 2 cents, right? It was one of the kind of core drivers of our long-term alt thesis. There's a few in there for those of you that were in the private group. Matic, Fetch, Seller 1 were kind of all on the top, alongside Digibyte and Litecoin and Monero, but those were in a subcategory we called baby Bitcoins, which is an entirely different thesis. I still think that holds some weight, but we're going to give that one a bit more time to evolve. The Web3 sector, gaming, I think, is way more powerful anyways, so that's why we focus most of our time on it. But effectively what happens is people get really excited about leverage and think, oh, if I do this and I'm going to make this much, but they very rarely calculate in the fact that their entire portfolio at that moment could be at risk to a large systemic shock, which happens all the fucking time. Market shocks happen all the time. You should calculate that in. So what's the point of using leverage if you're going to get 180x growth in 3 years anyways? It doesn't make any sense. That means, again, for every $1,000 you put in, you're walking around with like 180 grand from each thousand. So if you invested $200 every month for the course of 2 years, you're walking away with $250,000 with no fucking risk, except for the fact that you could have lost that $2,000. This is so important to understand, because the opportunity of this Web3 sector, Bitcoin included, is the ability to participate in effectively global decentralized financials. Let's call them startups. Now, there's a long time argument whether around a token is a security or not. And recently, the Securities Exchange Commission and the CFTC fought, and the CFTC won, now basically holding most of crypto under its guise, which is fantastic. Because a lot of the times when you look at these ideas, there are products. They're not securities. There's a large definition book of things that end up in the security pile that not all crypto does. Now, there are some things that could confuse that, again, like voting rights or dividends or paybacks from the token, etc. But for now, to probably clean things up again, they've gone into this idea of crypto being a commodity, which is super, super important. Because let's say I have this awesome company that I'm going to start. Let's say I make backpacks, and I sell these unique individual backpacks, like one of a kind, and people speculate on them after they've sold because they're unique. And the prices on the black market, or let's say the off market here, are 10x higher than I sell them. But I only sell one limited one at a time. Now, I use that product to raise company or money for the company to keep building effectively. It doesn't make it a security. It's still a fucking product regardless. So a lot of these tokens are going to end up under the product model, because it's like a token within a Chuck E. Cheese or something, a theme park, right? Trade your money for these tokens. You can use these tokens within the theme park. If people speculate on the tokens outside of the theme park, it doesn't fucking matter. So this is, I think, this is going to increase the understanding and regulation around this sector. And it's important because a lot of the times when these companies have raised funds, it's pretty easy to say that it is actually a product within the ecosystem. Now, whether that product is volatile in price doesn't matter. So it's nice to see that there is some clarity coming to this space, especially around that idea, because for the last about year, as I've got more interested in NFTs, it's become clear that these are much more like products than securities. So on a non-log time frame, the other thing I wanted to point out here too was this. So for all of you Wyckofians out there who've been studying, one of the quotes we live by is, well, aside from heads I win, tails I only lose a little, we're looking for the most amount of result for the least amount of effort. And that goes both ways, both from the up or down side. One of the things I want to do is point out to the top red bit here. This is our kind of money flow indicator, or money strength, I guess, pretty similar, but nonetheless our money strength indicator. And here we're going to measure the depth of the money strength. So what's interesting is when you're looking for result versus effort, the first aspect of result that we're interested in kind of quantifying here is the price spread. So what we do, we're going to measure these two here. The first quantifiable price spread was approximately 43% to the downside to get this particular volume signature here. Now, here we are on this side of the chart, and both of these, this and this, is the amount of negative sell volume coming in, and we have returned to the same price. This is actually a very bullish indicator in the Wyckoff methodology. When you have diminishing result at this point, because we're going to the downside, which is the price fluctuation itself is diminished. It's pretty much equivalent actually to the previous, but there's significant more volume coming in, which means that all of that volume was accumulated very, very easily, whereas the first time it actually didn't. Had we got this much sale pressure come through the first time, we probably would have we could have gone quite a bit lower. Although I would still offer a speculation that there's such significant large interests of buying power that know how to buy slowly cautiously and accumulate day over day without disturbing the markets, that what we just witnessed here again is effectively a bottom. Now, there's always argument that it could go lower, but you should always have that sketched in, and you should be focusing on a strategy that allows a price fluctuation of, let's say, 60% in any good accumulation model. Otherwise, most of the time will get wiped out. There is room for downside within this regression model as well. I don't think there's any way we would ever come down to $9,000. I think even maybe $23,000 is on the chart. We had talked about this previously, that we thought there could be a potential for a spring. But the fact that all of this supply was accumulated, as we see back here, and the price only came back down to what was 0.10 in our 3 peaks in a domed house thesis, I'm starting to feel more and more confident, that this is the effective bottom. So some of the charts that we like to take a look at, we're going to go actually over some more critical side market data at the end of this, but let's go back here. This is the Bitcoin percent balance on exchanges, all exchanges stacked. So the orange line is the amount or the percentage of Bitcoin on the exchanges, and the gray line is the price. And as you can see, the price started to run up, and during the previous drop, here's this huge chunk of supply that came into the market, and then it got chewed up and the price went up. And here what we see is this unique disconnect, and this is, I believe there's a lot of bullish divergence between the price and the accumulation. And as a matter of fact, if you look back in all of Bitcoin's history, this is one of the longest accumulation formats that we've seen in all of Bitcoin's history. What's unique was back in 2017, supply was able to come into the market while the price was rising because there were so few exchanges and so few people who even had Bitcoin that those two were able to meet. Whereas with this market cycle, since day one, the beginning of this market cycle, March 12th, we've been declining in the amount of Bitcoin on exchanges. This will eventually create a supply shock, and I believe that the bullish divergence we're seeing is largely due to much stronger, much larger, significantly more patient long-term investors who know that if they want to accumulate an asset, they're going to do it day over day over day for months and years on end. They've done this before. They do it in the stock market quite frequently. So now that those bigger players are here, we're going to see a different price structure. And this has led to some of our conversations where, actually, I don't think I have the other drawing of anymore on this one. No, I don't. Okay, let's go back here and maybe go off log for a sec. Yeah. No, we'll go back to log and take the regression lines off the top. Okay, so I believe we are in a secondary market accumulation. Again, for those of you that are studying the Wyckoff methodology alongside of us, I believe that this was the accumulation range, 2017 to 2020, and that right now we are basically in the SOS and backup phase. So for those of you that study, what you end up getting is a long-term accumulation range, something like this, where you accumulate through the entirety of the box. And as soon as you get a breakout, you get an SOS followed by a backup phase. I believe we are in a very, very powerful reaccumulation phase, and that after this, we basically go onwards and upwards for a few years with pretty much no more large 80% retracements in Bitcoin. I think the day of an 80% retracement in Bitcoin is gone. The reason being is as these bigger players get here, they become much better at managing the price. Now, there's some peak fear here, but there's some good arguments for Bitcoin continuing to go up even in the face of all of this volatility and fear. I'm going to bring us back to this picture, and I'm going to try to explain this idea with... So this is 70 years of data of the median household income ratio to the price of a home. Highlighted at the top here, the housing bubble of 2008 in house prices and the median income. And as you can see here, we are actually above that. So we are at one of the most expensive times in history for the price of a house versus how much the average person makes, which is basically horrible. It means that most people now can't afford a home because most people are only in debt. I think the average statistic is like something like 8 out of 10 Americans don't have money at all, or something. Like they're all in debt. Like even what they own is basically debt. This is very worrying. So I'm going to go over a few ideas to try to explain something here, but here's the M2, so this is the monetary supply, and here's the M1 monetary supply. So on the bottom left-hand corner here, you can see on March 2020, or sorry, was it February 2020, they had the pandemic bill prepared, and then in a very, very short order, they increased the monetary supply by like $9 trillion. So this creates massive amounts of inflation. If you just create $9 trillion of debt and you flood it out into the system on 0% interest rates, you're going to do two things. Number one, you're going to support a lot of businesses that would and should have failed by giving them more drug money, basically, to continue to pursue their interests of failing ideas and corporations because they've flooded the streets with free money, which is what 0% interest rates and monetary debt printing will do. So when we see these large disconnects between what the average person can afford, and we've gone over this multiple times, and I will get back to Bitcoin here. I just want to kind of finish this sentiment. Commodities have shot through the roof. Now, I want to make an argument here for Bitcoin being a commodity and its value continuing to increase, even though stocks and equities are probably in trouble here in the near term. So we've gone over this before, but this is Brent oil. This is the energy. Almost all commodities. This one is grains. Grains is actually probably the most worrying. Here you have grains, even from the top of the box, over 100% in cost. Now, this is direct inflation to the consumer. I don't know how the CPI has managed to hide some of this stuff, but this is all hidden costs. Between gas and grains, this ends up everywhere in your price bill on a day-to-day basis. So you're going to see massive price spikes and maybe even some type of food shortage depending on what country you live in and your country's ability to manage U.S. debt. That could vary drastically, I guess, depending on the country. Agriculture as well is also a commodity and also up over, at least outside of the box, like 90% again. So my argument here is that Bitcoin actually may end up functioning a bit more like a commodity under the stress of the breakdown of the S&P 500, because where are people going to go? They're not going to just want to sit in cash. Sitting in just cash doesn't make a lot of sense, especially when you know cash is basically a long-term liability, because at the end of the day, these motherfuckers can just go out and print huge amounts of it at absolutely any whim of their interest, which is not super helpful. Now, again, we could make an argument for inflation, I think, that is positive, like giving, which is basically how you give a loan to a company. It doesn't have to be inflationary. You could give the loan of money you already have, but most smaller banks and credit unions that did that type of are gone. So that's not happening anymore. You know, there's a great podcast by Richard Werner, not Werner Herzog, but Richard Werner, who talks about inflation being potentially a positive thing, but as long as it's loans in a decentralized manner that are given out to the smallest and often the most productive of companies, these kind of niche blue chips that exist out there today. So what does this all mean? Well, in a market that is full of basically, what is this? Is this a year time frame? No, there's the year time frame. Okay, so for the last 3 months, we've been effectively in peak fear. We've been riding and bumping along here at like this 0.10. If you go back to max time frame here, you can see in March of 2020, the lowest that we ever got to in the height and peak of the fear of the pandemic and people locking down and a deadly virus, which it wasn't. 8. That's where we hit. We got to 8 at that point. And at one point we hit 8 on May 17th. So we are effectively in the peak fear moments when everybody was locking down, scared, and we weren't allowing people to see loved ones in the fucking hospital, apparently. So somehow we're at the same type of peak fear moment, and these are almost always unanimously a great time to accumulate some type of asset. Well, which type of asset? In a lot of these stories, when stocks and commodities start to go south, stocks and equities start to go south, commodities become a big deal because everyday living is important. Your food, your gas, your energy, that's all super important. It actually becomes the highlight and the most important part of the average everyday person's ability to buy and or sell something, because that's what they need to get to work, to clothe themselves, to keep themselves warm, to provide their family, etc. So in those times, a lot of times when the stock market goes down, equities gets jacked up because all the inflationary pressure of that money spending, which people are selling their stocks or selling their homes or trying to go to the market, where does it go? It goes into average everyday goods, again, driving up the price of the commodity. And now that most people and most companies are starting to recognize that the U.S. liability or the U.S. dollar is long-term a liability, then what you want to hold on your balance sheet, Bitcoin's a great choice. So we've seen that kind of come across a bunch of the different market takes right now. What happens next is hard to say. But I think being capable of managing any downside here is going to be ultimately probably one of the most important things that one could do. And what I wanted to do here is I think I have a comparative. Oh, yes, here we go. So this is another chart that one of the private bear members had shared. So the orange line is actually the Bitcoin longs on Bitfinex, which is awesome. So you can see that we are like one of the highest points of leverage in the last, like, at least for the history of Bitfinex, right? So we are at the highest chunk of leverage in Bitfinex. Now, that normally strikes me as a bad thing. Normally when I see that much leverage in an ecosystem, I go, damn, that's probably not good, because someone's going to try to someone's going to try to squeeze these guys out of their position and bring the funding prices down. But it could also turn as a signal for markets turning around here. There's a massive amount of support of spot buying and now longs that have taken position here at the $30,000 mark. It may be enough to keep it up, but fear will always kind of trend the market downward. So we're in mind to keep our eyes open for what's happening on the day-to-day street level more than anything else. So again, I do not suggest you do leverage in any way, shape, or form. I think it's, again, it's always fun to learn lessons. The same way I'm not going to suggest you ever do mushrooms. I do mushrooms. So it's one of those, I don't know, make your own choice type things. But effectively, leverage can be very dangerous for someone who just, you could very easily build a portfolio to make millions of dollars. Why screw around and accidentally fuck that up? Okay, I did want to go over a few other things today here as well. Here's the Bitcoin longs chart that one of you shared as well. Bang, bang, bang. Okay, so again, Mayer multiple, we are down in accumulation range. The risk reserve down in accumulation range. Mayer multiple down here in the accumulation range, and again below the oscillator point at this point, which we didn't see too frequently. So again, I suspect this is probably one of the strongest places to be accumulating. Whether it's 23,000 or 30,000, you're not going to care in 2 or 3 years. Bitcoin's going to probably millions of dollars at the end of the day. And I think once people start to recognize that you can subdivide into a Satoshi, like I still think a lot of people go, Bitcoin's too expensive, I'm going to buy Cardano or Ethereum, which maybe is a good idea. But my whole entire time chatting, shit talking on YouTube, it's always Bitcoin first. Now, I'm not a Bitcoin maximalist, but I still always go Bitcoin first for a reason. It has some serious time on deck, and the Lindy effect is actually a pretty powerful idea. Is that once something has been able to withstand X amount of time, the chances of it being able to withstand that much more time increases dramatically. So because of this, I think Bitcoin is probably the safest bet. And actually, I heard a great conversation of someone saying the risk of Bitcoin going to zero no longer exists. So there's only room for the upside. This is another sentiment that Michael Saylor had shared, which is, hey, it's going to $1 million because it's not going to zero. In 2013, 2011, when we were buying it, we're like, yeah, Bitcoin, it's going to go to 10 grand. We were chatting like my hair was long and I'm a hippie on the beach or some shit. That's clearly, it could have gone to zero still. Like that was the risk was it could go to zero, but that tail risk going to zero now basically doesn't exist. Bitcoin went public last year, or I guess in 2020, and it will never go to zero unless something catastrophically wrong were to happen within the code that's not a non-negotiable kind of deal breaker. But effectively, we've made it through so many years with so many bumps and so many breaks and tatters along the way that it's very unlikely that would happen. So I believe that now that regulation is getting sorted, this is basically the best place to be buying Bitcoin for any person, right? Because the zero risk is gone. There's only up now. Effectively, even though we've got a little bit of room for downside, it ain't never going to zero. So that's important to remember. And again, lastly here, this is the supply active of last year. Get my face out of the way so you can't actually see the right hand side of the screen. There we go. And as you could see in the previous times, every time Bitcoin, this orange line bar started to flatten out, that's where the bull market started to take off. So we see this kind of flattening out of that price curve now. I suspect, here we go, there's all data. Actually, although it does not look as clean, let's just focus on this current trend. As it starts to flatten out, it's very likely that what we do is we see a jump probably up to $40,000. It's probably going to do a little bit of face melting, which we all need for a little bit. And I'm hesitant to think that Bitcoin's going to get as hurt as the rest of the stocks or commodities because they're highly They're way more overvalued than Bitcoin itself, which has grown organically to this point. The stock market, most of it's private funding, most of it's stocks, BlackRock, Vanguard, Street State, the people who are buying up the huge chunks of it, they're, long story short, I suspect Bitcoin will actually do well as other things may falter. Now, we could make another real argument here that for the S&P 500, which we'll scroll over to now. Again, this don't look good. When you see tops like this is usually, bam, drops down quite quickly. But you could also see a reaccumulation range take place for one kind of final blow off top before huge retracements. And this is what a lot of people are worried about, is that the entirety of the S&P 500 is way fucking high. So here we go. Let's actually drop this on log so we can fit it in one screen a little bit easier. Okay, so this is S&P 500. For those of you that will remember, the reason we like this chart is actually, let's go here. We'll open up Bitcoin again on the bottom, on the top, and then we'll go out of log so it's a bit clearer. So this is the fundamental thesis of why we think Bitcoin is going to go a lot higher and for quite a bit longer. This is what's known as three peaks in a domed house. I'm sure many of you will recognize this from hearing me rant about it day over day for the last, let's see, 60 days now. But effectively, this is a very strong reaccumulation pattern, and it looks very bearish when you get down to the bottom. In 2008, people are like, oh my God, it's over. So again, the pink is the S&P 500. Oh, and my face is in the way here again. I gotta scroll back. Boom. Okay, there we go. So Bitcoin in yellow, S&P 500 in pink. And if you scroll out, look for how much longer the S&P 500 broke out after this position. I think Bitcoin's going to do the same thing. I think once Bitcoin goes up from here, it's going to go onwards and upwards, maybe upwards as high as like $300,000 with very few big retracements. Even in the S&P 500 here, the largest retracement you had was 29% after it broke out. That's it. And I guess the retracement today would be pretty similar actually. So let's just, for fun, let's measure that. Boom. Yeah, around 20%. So since 2008, the S&P 500 has never once gone below 30%. Let's give some breathing room there. I think that's what's going to happen for Bitcoin. I think once Bitcoin goes from this moment, give or take 10 to 20%, it's going to go onwards and upwards with no retracement bigger than basically 30 to 50% for the next like 3 to 5 years. It's going to be awesome if you happen to be on the right side of that trade. So again, at this point, warning, it's too risky not to own Bitcoin at this point. The unfunded liabilities, the central banks around the world are all doing the same stupid shit. You've got people like Janet Yellen out there being like, well, maybe it was a bad thing for me to call it transitory. And although I think inflation is going to stay high, I hope it doesn't. Like, what the fuck who the fuck? Okay, who can get a fucking job off hopes and dreams this day? This bitch is so disconnected from reality. You get to keep your job hoping that fucking inflation will come down. Be like, well, I guess I used the wrong word by saying transitory. Of course you fucking did. What the hell are you talking about, you crazy old bird? It boggles my mind. We seem to allow institutional failure and fraud at such a grandiose level, but then we box and ostracize people for the smallest transgressions in everyday life. It makes zero fucking sense. Anyways, so back to the charts here. I do think Bitcoin's going to continue on a multi-year bull run right after this point. So if you're not in the market yet, not financial advice, but you probably should be. Okay, so that's about it for today's shit-talking rant episode by Tio. Thank you all for joining me. Give me the thumbs up. I will reserve the rest of this section for bantering back and forth with the lovely Bear family in the chat. So if you have any thoughts, comments, or questions, you want to tell me how ridiculous I sound, leave that in the comments, as long as you're not rude, because it hurts. I'm super emotional, guys. I'm very sensitive, and then I'm happy to chat. But okay, because I do block just stupid, rude comments that I don't think should exist there for any particular reason. Okay, so let's take a look at here what's going on. I want it all, and I want it right now. It's a good. You deserve it. I think. I don't know you personally, but I'm gonna say you deserve it. Really capricious says you could make sleep talks about calm, fruitful trading. Very soothing voice. Thank you. I appreciate that. I'm really a professional singer in the background, but it just makes so much less money than investing that I I stopped trying to play music for money at all. So that's maybe why I have a great voice. What's the word on Link? Is the bottom in? That's a hard question. There are other oracles I think that are going to start to contend in this space. Super Oracle's just raised like, I don't know, $40 million or something to kind of play around with. We can take a quick look at Link though. I will do that now just for you because I know we got a bunch of Link fans here. We have returned almost to the bottom of 2021, which is quite nice. Big peak top there at $51 for Chainlink. Again, distribution is probably the hardest one to recognize. It's way easier to find bottoms than it is tops. Or maybe it's just because I like bums more than tops. I don't know. Who knows? It could be my own personal thing. I'm much better being like, hey guys, this is where you want to be buying than telling you where to be selling. Maybe it's because I don't even like selling nowadays either. I'm just like, I just want to keep accumulating. It's easier. I don't have to think as much. Link's pretty much right back at where it was in 2021. There's not a whole lot more room for downside here. I think what we're going to start to see is, again, consolidation and probably another 3 months of kind of boring, especially for the alternative assets. Bitcoin may react faster, but I still suspect there are not enough bored and angry people in this market. So we need boredom and anger to go higher before I suspect prices on Link will go higher too. So that's probably like another 2 months of something like this before I can feel confident. So yeah, looking for the building of a new trading range on most of the assets. I'm not recommending anything else, but just as an example, FTM, Solana, Axie, they all look very similar in structure right now, and they're all basically back to where we were in July 2021, which is awesome. It's likely that we're near an accumulation range. We could come much lower. Some of these things will fail. Some of them won't be here in the future. Maybe Solana won't be. I'm quite bullish on Solana still. I just, even though it breaks down, it's like, I don't know how many videos of Ferraris I've seen catch on fire, but it's a fuckload more than I've ever seen Toyotas catch on fire. It's because they designed Ferraris to be like peak functioning machines. Even a slight change in the ethane or octane, I don't know which one. I'm not really a car guy, but it could set the damn thing on fire, right? They have all these emissions checks and very, very precise. And if it's off a little bit, up it goes. So I suspect Solana is the same. It's still running in beta effectively too. I don't even think it's technically it's like a mainnet function. So they're trying to build something that's very quick, very fast. And often when you're building, just like Elon Musk proved, you fucking launch how many rockets that crashed into a burning fire of total shit abyss before they got it right. And you got to expect that burning shit to fiery abysses is actually part of the program. So just because it's fallen and crashed don't mean shit. Like you got to wait. One of these rockets, once they get it to land, take off and land again, they got themselves a deal breaker. So there's that. I love the channel. I have a question. I made 13,000 from the OP airdrop. Nice, great work. I was thinking of putting into XRP. Do you think it might drop from 30 to 20? Oh, I would. Those things I try not to focus on, like price. Although we use price as kind of an indicator of where we're going on the long term. I'm not going to speculate on if it's going to go down X percent, or whether you should spend your money on it. Being able to build conviction and knowing wait, hold on. Here's a better way to lose it. Are you prepared to lose it? Because if you're prepared to lose it, then make the investment. If you're not, then I wouldn't. Invest how much you're willing to lose at that exact moment. If it's $50 or $50,000, probably shouldn't matter. But until you get that idea of heads I win, tails I only lose a little, you're not making the correct connection between the mantras that I believe to be so powerful here, which is your downside risk should be things going to zero. That's what it was for Bitcoin all the way up until 2020. If you go back to watch my videos, I kept saying Bitcoin can only go to zero, right? You can only lose how much you put in. So play the game appropriately. Whereas Bitcoin's now left that range, everything else still exists there. XRP could easily go to zero. It doesn't have enough oomph, in my opinion, on the long term. It doesn't provide a lot of the real deep utility value aspects that Bitcoin does, in my opinion. Again, follow your intuition and only invest what you're willing to lose that particular day. If you show up 2 months from now, you're like, hey, you know what? XRP is higher and or lower. I'm going to continue to make this strategic investment. Then I think you're following a repeatable, consistent process instead of just like, I'm going to go in all now because it's at 20 cents and it's never going to 10 cents. It just doesn't make any sense that way. You go to the gym as often as possible to get the consistency and gains. You don't show up, take a bunch of steroids one day and go, why the fuck am I not jacked like The Rock? That's just so try to find a balance between that sentiment, I think, is the best way to go. FTM Phantom. Yeah, we looked at FTM again. What you want to accumulate, I think, is very different. Yelling rude things for no particular reason. Not yelling rude things. I thought, truth can be a little bit harsh, I guess, but not rude. Let's see. Please tell me we can get some music today. Okay, I'll do some music today for all y'all sweet people out there. Let's take another. Let's see what else we got on the charts here. I'm gonna go back to this. You know what I should do? I should put this on the 1 minute. Yeah, that way the screen, it looks like there's something happening like right as we're talking. Everybody likes the 1 minute chart, don't they? No, don't look at the 1 minute chart. This is a horrible thing to do. We always try to make longer term macro assessments. Same with if you're trying to measure the temperature of the planet, you don't use only 100 years. You should probably use like at least a billion or something, or at least a million. Let's go with at least a million. It's just you need a relative amount of data to understand where you are in the data set. If you're looking at the 1 minute chart, even the 15 minute, it's just so much confusion sometimes. All these things are not very unreliable. Brian says, you are the man who loves the rants about the bird. Thanks. Markets controlled by maniacs. Transitory. XRP is the new asset-backed stablecoin being... No, I disagree with that. I disagree with this. There's a lot of hype around what they're trying to build, but their XRP is not any way connected to the underlying other aspects of what Ripple is trying to do for banks. They're not even closely related. So there's that. Oh, not you, man. I'm never rude. Well, sometimes I'm rude. Let's be honest. I can clearly be an asshole every now and then for no reason, by accident, on purpose and by accident, I'm sure. Oh, is a purpose about not rude? I get it. I see what you're saying, Dylan. Ava Bear says diamond hands. No, but Ava Bear, you were smart enough to go, hey, okay, so Ava Bear is part of the private group. She jumped in the early IEO for Star Atlas. I don't get this exactly wrong, but I think you put in like $500 and walked away with like 40 grand. So, and I think you sold pretty much the top on that one. So congratulations on selling. But yeah, when you're going through long-term accumulation, it's easier just to focus on a strategy. Whereas if you're dealing with venture capital, if you get 150x position, you just click that sell button, you take some of your profits, you come back in a few months and see where we're at. You got a smart move there, Avar. That was a good one. Tio, the composite man. Definitely not the composite man. Together, maybe we are all composite man, but I myself am like a little sweet dolphin. For those of you that are on Twitter, you'll get that, I guess. If you're not on Twitter, that won't make any sense. Ripple is being adopted by central banks worldwide. No, that's not true. That's not true. I'm sorry, that's not true. There's no evidence for that whatsoever. I was actually friends with the guys who started Ripple right out the gate when it was beginning in Canada. I was interested. I even had a podcast with them. But anyways, nonetheless, I'm not, I don't believe that's true. I haven't seen any of that data or evidence. What I do see, though, is a lot of countries making Bitcoin legal tender. The merge is coming. Crazy that people don't get it. Yeah, Ethereum, look, the whole idea of smart contracts is really valuable. Anytime you can provide an ecosystem that's going to give you the ability to create sovereign governance, sovereign identity, sovereign contracts, that's super valuable, especially if you look back in history. So I think that's the case. I don't think ETH will flip Bitcoin. I see Ethereum, I see Ethereum basically adapting to function. The entire point of decentralization is you have choice. Decentralization indicates that there always will be more than one, right? So it's very unlikely, in my opinion, that Ethereum outpaces Bitcoin, but that they grow together in tandem. And that the reason why Bitcoin is so high is also the reason why Ethereum is so high. In fact, they are growing together. If one didn't have the other, I'm not sure they would have taken off the same way. If Ethereum didn't have Bitcoin's kind of back of knowledge to launch off of and financial interests of people in the early days, I don't think it would have got to where it is today. I believe that you will always see a much more collaborative and symbiotic relationship between the two. And I bet that what you'll see, well, whatever. That's just my speculation. If Ethereum does flip Bitcoin, great. That's awesome. But I don't think it's going to be the case. I suspect that Bitcoin will chug along and then end up in the trillions of dollars. And then Ethereum's gas contract fees, well, you're going to see a lot of other competition out there, and it's still probably too early and much too young to say that Ethereum has earned its space. Although the vote for the Bored Ape Yacht Club by all of its holders to stay on Ethereum was a nice vote of confidence for Ethereum, it's still got a ways to go. If it starts to prove itself with this merge and we start to see a few other indicators take place, it could definitely go much, much higher. But I think Bitcoin will always be our main monetary asset, right? Now, what is again, this is kind of one of the differences. Well, is a Bitcoin the money and Ethereum is like the oil or the gas, which is a great argument because that's what we call it when we burn Ethereum in the first place. Effectively, we're speculating on its ability to be a price for the gas to operate that machine, right? So, interesting conversation, but I'm not going to speculate that Ethereum will flip Bitcoin. Even if it does, great. It makes no difference to the core part of what we're doing here, which is decentralization, and technology will lead that in general. So, I hope if it's better for you, I hope it does. But it's hard to say. I think that these two will continue to evolve together, and effectively, if they need each other, like they're almost like a husband and wife or something, like that maybe don't talk a whole lot yet. They're like taking space right now or something. But Bitcoin and Ethereum are the dominant in the culture at the moment, and I suspect that they will stay that way, probably pretty close to where they are today. RBC, CIBC are not using Ripple. That's not true at all. Okay, that's fine. I love that. Okay, so there's a lot of speculation on the internet, especially around Ripple. It's fascinating to me that people basically create conspiracies around their own interest because it suits the end narrative of where they want to go. I'm sure in 2012 I was equally guilty of this same thing, thinking like the world was going to end or something. I was living in Guatemala doing cacao ceremonies, but effectively what we do is we look for biases that confirm our thesis instead of what disproves it. And there's a lot of disproof for what you've just said there, my dear friend. There are actually way more banks that work with Ethereum and USDC, but sure. Crypto Carver says, I was looking when ETH 2.0 upgrades with the burning mechanism, it'll take 10 million of selling pressure to suppress price. It's around 8 million. I think this should push ETH higher. I think we're near the bottom of the market. Yeah. Although Ethereum is way riskier than Bitcoin. Ethereum still could go to zero. Nothing to say that couldn't happen yet. If we get like 5 years down the future, if Ethereum's still like top up there, well then it's, in my opinion, I'm like, Ethereum ain't going nowhere. Let's see here. And proof of stake is a scam. You are the yield. I'm not going to go with proof of stake as a scam, although it's, let's say it's not as organic as doing work. Proof of stake, you can buy your way into voting, whereas proof of work, you still have to buy your way into voting power. It's really no different, I guess, today. So that's hard to say. So Ripple's partner list is much shorter than Ethereum's. So, and just because they're partnering doesn't really mean a whole lot. Banks are actually doing a shit ton with Web3 in the background. Tons of banks have partnered with R3 and Corda too, but fuck does that matter? So yeah, just because there's a partnership agreement doesn't mean a whole lot. It means they're trying to get whatever. I'm not going to argue with the Ripple fanboy. You do you, bro. You do you. I have the same thesis no matter what asset it is. Heads I win, tails I only lose a little. I don't care about XRP's partnerships. They're not there. They're not functioning, okay? They're not doing anything. L3 Corda has an equal number of partnerships with banks around the world too, and I'm positive Ethereum has more. So that doesn't make any sense. Avalanche is also working with a bunch of banks in the background. So also, like, who are you comparing Ripple to? I mean, if Avalanche is way better than Ripple. Ripple's not even like good technology. It's not. Again, my investment thesis stays the same regardless of if I agree whether I agree with you on an asset or not. I wasn't a big fan of Theta, but I told many of our bear family, if that's what you think is going to be the hip, you go ahead and do that because your intuition might be right and I might be wrong. And that's the whole point of it in providing a thesis and a philosophy instead of this is what you should invest in and this is what you should buy and this is what you should sell. First off, because that sounds like financial advice, and more importantly, it's not transposable. I can't give you data that you can bring into your own life that you can use. Whereas here, this is a repeatable process that regardless of what asset you're looking at, whether it's fucking Monster or Ripple, it doesn't matter. A good investment is going to be a good investment. Who spots it? Who can tell? I don't know. And if you tried to show me Monster energy drink, I'd have been like, these things are shit, sugary, fucking taurine. They're bad for you. I would have been more likely to invest in kombucha companies. And they both did well. Although Monster did better. So there's that. I could have got that one wrong. Okay, a few more thoughts here. R3 is not using XRP for settlement. That's fine, Zubarev. I know you're an XRP fanboy. Let's reconvene in 5 years, okay? Because I've been talking the same about XRP since it started. Again, I suggest owning a little bit of whatever you think is interesting, even if it's Dogecoin, because you can never know what the future is going to be like. You know, again, when Dogecoin in early 2020, I'm like, yeah, you should own a little bit of Dogecoin because people like dogs and the world is full of fucking memes. Like this just makes sense, right? I would rather own Dogecoin than fucking XRP. I'll tell you that much. Yeah, that's where we'll leave it. Dogecoin is much better than XRP. Thoughts on Algo and their stated proofs? I've chatted with a few tech guys who love Algorand, but I'm not smart enough to understand too much about it. I could make conceptual arguments. I think Algorand was really well positioned to do stable coins and to do some type of contract conversations. But again, that's a little bit out of my field. Maybe good at technicals, but not like conceptually technical. I usually ask my more technically literate friends. The same way I would go, hey, you know, how is this piece of software written? And they go, well, this XRP is not. And Algorand is. Again, I would rather pick Algorand than XRP. Way better technology coming out of Algorand's core team. Okay, proof of work encourages competition and decentralization and fairness. Yeah, but proof of work is also through buying. Like if you have to spend money to buy Ethereum, isn't that technically proof of work? Like where'd you get the money from? You know, so where'd you get the money to buy the miners? It's the same type of investment to get the thing that you need to be a part of the staking system. It's a hard argument. I wouldn't go so far as to say that like proof of stake is garbage intrinsically because it's not proof of work. That doesn't make a whole lot of sense. Again, I still have Bitcoin as our guiding thesis and light here in the core of for almost a decade now. So that hasn't changed, and I don't think it's going to. But in terms of this whole the new potentials, like again, for those of you that ever tried Ether Delta or Fork Delta, when Ethereum was like the first kind of peer-to-peer contract trading that was coming out in Ethereum, that shit was like fucking DOS. We've come so far since then. Like even Uniswap though now looks like DOS compared to what will come out next as well. So do you still believe in Star Atlas? Yes, we are still. Oh, yeah, so we make investments and then we walk away from those investments. Yes, so we make those investments and then walk away. We'll recheck if they go to zero. Great. We like the Star Atlas team, but we made investments in like Nyan Heroes, Miria, Joyride Games. Let's see who else here. DeFi, Drop, Solus. Let's see, Illumia, Decimated, Rainmaker. We love the gaming sector, and we're investing heavily in it. Period. Whether they're for better or for worse, we don't know who the winners are going to be, and we really don't always try to pick the winner. We try to pick the theme and get a few in the theme right, if that makes sense. Great buy now if it shoots. What do you think about Ape? Ape token, I'm not entirely sure, although I do like the Bored Ape community, so there's that. The upswing says proof of work ends up concentrating hash power into the hands of the few most powerful miners that can afford it. Both proof of work, and see, this is my sentiment, both proof of work and proof of stake end up doing the same thing because it's a financial interest that gets you into the position. That's true. But it's the same for Ethereum. I mean, you could have bought Ethereum at 30 cents. You could have bought Ethereum at $1, $30, right? You could have bought Ethereum at $80 just a few years, like in 2017 or 2018. So it wasn't that long ago the average person could still afford 32 Ethereum, right? So I don't think proof of stake was too far out of the average person's ability to accumulate something if they thought that's the direction it was going, to say that it's ended up in the hands of the power of only the very few. Now, again, this is kind of always one of the arguments, is how do you build the most fair form of adoption? And there's no clear route to that yet, because humans are not always adopting things that are clear. Humans adopt shit that is totally fucking false for long periods of time. Dichotomies and schisms exist for decades without anyone interfering. Shit, Scientology is the thing on this fucking planet, people. Like, Tushi says, serious question. What's the utility of XRP from countries wanting to use CBDCs? Again, I don't think this is the way it goes. You don't see a bunch of countries making XRP anything. Like, it's Bitcoin. Seriously. The majority of them are adopting Bitcoin. Even here in Costa Rica, Bitcoin is considered a legal tender. You can pay employees, you can pay bills with it. Well, depending on where, I guess you can pay bills with it. So Bitcoin is legal tender in many parts around the world. Whereas if I walk around and I ask people what XRP is, very few people know what that is. And first off, if you're rooting for central bank digital currencies and the central banks at all, I just don't fucking like you. So I don't care what XRP does. It's fucking trash if it starts to collaborate with the fraudsters and the fucking criminals that are the banks that we have today. So I hope it fucking burns to the ground. Anyways, that's my if you want to work with the criminal banks that got us into this position anyways, you fucking your thesis. Tio, do you acknowledge the possibility that Avalanche may not see another all-time high? Yeah, I disagree with that. But sure, yeah, all of this most of the things, look, everything other than Bitcoin, in my opinion, could still go to zero. I'm not exactly sure which one the clear winners are yet, but they're there somewhere, right? Bitcoin is the only one I think that's gone out of the realm of it going to zero. Crypto Carpenter says, anyone try the DeFi projects on FTM? I have not. Not giving advice, just like DeFi is much for fun. Yeah, it's important to explore and understand more about this technology. I think largely we should always be budgeting in participating, whatever that looks like. XRP was created to steal Bitcoin from newcomers, maybe. I hated Bitcoin the day I saw Bernanke attached to it. Yeah, those are clear signs. Like if Jan and Yellen came out in favor of XRP, I'm like, well, there we go. Now you have it. This thing is actual trash. I'm here because decentralization is better, ladies and gentlemen, not because I want the old fucking system to be more efficient. We need a new one that doesn't have the same fucking criminals in charge. This is the way it goes. So there's that. Okay, well that was fun. That was some good ranting. I appreciate you guys. Always fun. Remember, we got 250 of you online right now. Please smash that thumbs up. Oh wait, actually here there is a few more things I wanted to talk about. One of our partners, speaking of partners, is launching their Sigil NFT. So we're big fans of the gaming sector. Miri is one of the games that we are investing in, and we're also helping in the background. We try to support all of our partners through a mix of from hiring to connections to conversations, whatever it might be. We just try to help out. So Miri is having their Sigil NFT. And remember, just like any time, ladies and gentlemen, be very cautious about Discord. Do not click on any links from anybody other than like direct links. Make sure you follow Miria Games if you want to follow them directly, and you go to Miri.com/Sigil, and you can get a free Sigil NFT, which will be part of their gameplay in the future. So I've gone in, they've created this helpful little explainer video of how you do that through your MetaMask wallet. But Miri is one of the ones we're super excited about. Their team is fucking rock solid. They got like, I think they have their partner, some of their other partner list up here. Let's see. I saw it the other day. Their partner list is amazing. Dave Malcolm, their CMO, who we're friends with, you can find him on here as well. These guys all work for like Riot Games. I think they've got the developer of Civilization, Ubisoft. They've Jonathan Teo. I mean, anytime someone has Teo in their name, I'm super stoked too. So Jonathan Teo is also a Rockstar founder. I think Miri is going to do very, very well. They're building an L2 scaling solution on Ethereum for their own little kind of game center, which is one of the reasons why we also invested in Joyride Games. It's also one of the reasons why Gala Games is a good investment, and it's also one of the reasons why we think, wait, which one was it? Oh yeah, CTX was another good investment, we think, within that kind of powered community platform gaming ecosystem. So always like a free NFT mint. Drop in there, get your NFT from Miria. We've got them coming on the show here in probably a week or two. We've actually got a few more Web3 game podcasts, Arcade, the Benji Banana guys, some more of the Animoca brands, because we're good friends with them. And we'll keep doing more of the game stuff because I believe that mass adoption inevitably comes from games. We think gaming is basically the biggest on-ramp to financial services ever, period. So we're super excited about that. Yeah, well, that was it. Thank you guys all for joining us today. I really appreciate that. It was tons of fun. I love the rants. Again, remember, if you think something's going to blow up and it's like it's the best investment, you've done your research and you think TO is wrong and stupid, well, then make your investment. That's the whole point. The reason why I show up here isn't so I can give you what I think you should be investing in. It's so I can share the philosophy, the mantra, and the theme that has worked, because those things are transposable. Just like music, I can play the guitar, the flute, the oud, the drum kit, because once you know how to play music, you can play pretty much all the instruments. Like, I don't know if you knew this, but this is a clarinet. I could play the clarinet because I can play the guitar. This is what a transposable mantra should do for you. It shouldn't be specific. I don't want it to be technically, this is how you play the clarinet. This is a C sharp. It's useless information. What I want is the idea that you can take and play on any instrument to come across this show, through this episode. So your best investments are the ones that you make, the ones that you feel confident, the ones that you've done your own research on. And I continue to suggest that you do that. And the thing that I want to do is highlight, I guess, basically the mantra that comes across through that. So I guess just for fun, what we will do is we'll end today's episode off with a bit of music. So to do that, now that we already got the clarinet here, and I was using it as boom. Okay. Open C drone. Let's see here how this sounds. Tell me if you guys can hear this. Oh, there we go. That was the end of that then. Well, just one squeak and it was game over, ladies and gentlemen. I don't play the clarinet probably anywhere near as much as I should, but it was the closest instrument I had on you, and it happened to fit the explanation of what we were going through. So thank you all for joining us on today's wonderful ranting Thursday morning episode. It's June 9th. Yeah. We'll see you guys in the next episode. Boom.